But this thing is complete bullshit. The graphs that you see, they always show you trends after the trend is over. It is only in hindsight that a trend gets predicted. Never rely on charts for long term. Rely on your own fundamental analysis. The industry and the company I am investing in should have a need in the future. See, when the future prospects are lined up, I can rely more on growth in revenue. If the profits don't go up, the company is going to receive orders in perpetuity because there is a need. Now it is up to the management to extract as much money out of it as possible while leaving their customers as well as investors like me happy. Let us expand onto this thought further. See, seeking to invest in an industry that will have a need in the future is called following the trend. See, people think following the trend means following the rising market. Whenever you see a particular graph rising of a particular sector or stock, it will show you a trend. People think this, but this thing is complete bullshit. The graphs that you see, they always show you trends after the trend is over. It is only in hindsight that a trend gets predicted. Never rely on charts for long term. Rely on your own fundamental analysis. The knowledge of day to day helps you to analyze what is the need of the future generation for the next decade or so. Basic analysis is fine. Seek out the industry you want to buy into. That is available at attractive pricing. Remember, you should never pay up. Now think for yourself. Do you really believe people will have a need for this industry in the near future? Let's take my example for microfinance, the finance sector stock that I have. I was skeptic before entering into the microfinance industry, and I saw them as straight away thieves because they used to charge almost 40 to 50% interest per annum, hence slowly looting the public, the microfinance space. I was worried about my investment in Manappuram Finance. See, then I tried to deep dive into it. After spending some time in my village, I got to know how much of this microfinance is needed by actual living public, the village people. How the general public is craving for small space financial products to fulfill their day-to-day needs. The rupee 40 charged per month on a rupee 1000 loan might look quite expensive to someone in city, but it is very much needed so that the village economy can stay afloat. This 1000 rupee could be used by farmer to buy grains for his buffalo, which could be repaid the very next month when the buffalo is on milk once again. Hence, it helps in establishing small family businesses even in rural areas. Now, what can an investor like me do once we have identified a sector? I just have to make sure that the microfinance company in which I am investing has a good control over its NPAs. NPA is non-performing assets. By living in a village, I got to know that the demand for small loans is not going to end anytime soon. as long as the money market survives, the demand for small loans will always be there. The small ticket loans provided by microfinance businesses. The main motive, my main motive is the industry that I'm investing in should have a demand in future. And when there is a demand, there is growth present. See, surplus demand for the sector by the general public helps the company to stay afloat even during turbulent times. The future need of the sector works out as margin of safety, because even if you have paid an expensive entry price, the growth will be there in revenue. It will cover up the gap in couple of years. Like the finance company I am invested in, our management has to make sure to toe the line between RBI restrictions and making money for its own investors. Plus, major point, reducing the NPAs, non-performing assets, as much as possible. If the management is able to provide this stability for its investors, then we could see a golden future for our stock market returns. So that was it for me. Don't forget to subscribe. Thank you for watching.